a lot of clients are looking at retiring early. I just met with a client the other day. She's looking at retiring early, and we're looking at her options when it comes to health insurance because her health insurance, up to this point, she's been working for Disney for a long time and has had insurance through the company. And now she's looking at retiring, and so we're looking at options that are cost effective for retirement. She'd like to retire early, so before 65. And so there's lots of things. If you're leaving Disney early or want to retire early, here's how to cover your health insurance for that early retirement period. So the first thing is you do have access to Cobra, and so Cobra is basically the insurance that is the company's insurance that allows you to continue using that insurance for a period of time after you retire. About 18 months is the typical. There's other instances where it could be further than that, but usually it's up to about 18 months that you can use the company's health insurance plan. The downside of the Cobra plans, though, is the cost associated with it, because now the company is no longer paying their share for the health insurance costs. That ends up getting pushed to you and can end up being really expensive. And so, Cobra oftentimes is chosen. It's more of a feeling of assurance, knowing that you have the same plan to be able to have the same doctors and all of that. But from a cost standpoint, it ends up being one of the most expensive options. The second option is looking at what's called the Affordable Care Act, or the healthcare marketplace. Healthcare.gov is where those are listed, and there are health insurance brokers that people can use to look at these as well. But the Affordable Care Act plans are funded somewhat by the government, and so they're a little bit more competitive pricing than maybe what you're going to be able to get on a Cobra plan, even if you don't have any sort of income benefits that reduce the premiums of the health insurance. They're still not too expensive from my experience, but that's all relative when we're talking about health insurance. I mean, you could be looking at $500 to $1,000 a month per person pretty easily. But the Affordable Care Act, or the Obamacare marketplace, the nice thing about that is if you're able to keep your income under the income limits, which is basically 4 times the poverty limit. So it depends on how big your household is, whether it's one person or two people, or if you still have dependents in your household, you can receive premium tax benefits where they basically reduce how much your health insurance cost, your health insurance premium will be based on your income if you qualify. So you need to do some calculations on what what income streams are going to be, and see if you qualify. And then the third option is using some sort of health insurance alternative. Now, these are typically what are called sharing plans, and so they're not health insurance, and so there are risks involved with that, and that's not for everybody, certainly. But I do see sometimes folks using a sharing program, which usually has a lower monthly cost, but the your out of pocket commitment is much larger, and oftentimes there's a lot less options for coverage. But it is something, if someone is willing to take the risk, you can do your own due diligence. Buyer beware for sure when it comes to those plans, because they're not regulated like health insurance, because they're technically not health insurance. Although you do hear good stories of them. Again, you just want to be careful when you're looking at that, but that is an option to consider. There's trade-offs to that. And then the fourth is, if you are retiring early from the company, there are sometimes I hear of clients that will take on part-time jobs, and part-time, sometimes there are some companies that will offer their part-timers health insurance as well. So maybe you're in some high-powered, stressful job that you just want to get out of, but you're not ready to quit completely. So maybe you retire from the company, but then you take on a part-time job that maybe still provides health insurance options for you. So those are a few options to consider if you're looking at leaving Disney early, retiring early, and you need to cover your health insurance costs. Those are some ways to do it. My name is Kyle Newell. I work in here, Winter Garden, Florida. Meet face to face here in the Central Florida area. I hope you found value in this video. If you have questions, feel free to reach out. I hope you have a great day and take good care. Bye bye.